All right, YouTube. Good morning. Good morning. This is Jason with Tactical Data Desk LLC, veteran owned, veteran operated. It is a absolute pleasure to be with you Monday morning for May. Can you believe it's May already? Holy cow. Months are flying by. Well, welcome to the live stream. I am about to hop on a work call, but I got some news here. Let me make sure I'm live. This is the hardest thing to do, make sure I'm actually up and running. Now, what happens when you get older is nothing's as easy as it seems. So, looks like I am live. I can see myself talking, which is a good thing. All right. 9:20. Who do we have in the chat? Who do we have on the stream today? I've got some exciting news to share. I've got this set up. Does it look okay? Here we are on ES. So we're pre-market still, 10 minutes, 11 minutes to open. So I don't really want to go over the levels yet because they will update when market opens big time. And I'll make sure that's all refreshed and updated. But man, what a weekend I had. Anyone have a good weekend? Or a bad weekend? Or no weekend? Because sometimes that happens. Yeah. I'm going to have to totally redo. So now I'm going to have to totally redo my entire desk. Good morning, Jimmy. Jimmy! What is up, my man? No. That's not what I want. All right. Is everything, we got it? We got it? We got it? Oh, darn it. Okay, back. There we go. There we go. Okay. We are rocking and rolling. Okay. So still pre-market. I got to log into this other. Oh, man. Yep, we're good there. I got too many things going on. I needed to check into my SBA because my NAICS codes should be ready to go. If you don't know what that is, I don't either. I don't know what that stands for, but I'm trying to get my certification for, not trying to, I am getting my certification for service disabled veteran owned small business. And that process, I don't want to say it's hard, but it's a lot to go through. First thing you got to do is be service disabled and a veteran. Obviously, that's the easiest part, I guess. But then you have to create a sam.gov account. And then after you create a sam.gov account, then you create a SBA account and do your application, because everything for the SBA application flows from sam.gov. And you got to make sure they're exactly correct, because if they're not, it won't work. So the first time I did it, it didn't work. I needed to get a cage code, and then from the cage code, select NAICS codes, which took a while to do. So after I did my first application, had to redo it again, and all that takes multiple days. So I'm trying to see. There's no NAICS codes in there yet. Darn. I was hoping that'd be there. But that's life. That is life. Well, we got 6 people rocking and rolling. I'm going to flip over to my other computer real quick. I got to log in. Haven't logged in yet. Well, I want to hear about weekends. I had a busy weekend. So Friday, was it Friday night? I can't remember if it was Friday or Saturday. Oh my gosh. I got all the rest of the mirrors up in the home gym. And then got all that cleaned. And Saturday, I don't remember what I did. I was busy though. And then yesterday, I'm working on a paver patio for my trash can area. All right, we still got a couple minutes before market opens. All right. All right. Almost ready for market open. I did quite a bit too. I was going to wait till we go live so I can tell you the big update I got and go through some charts. We got a couple minutes here. How do you guys hear me? This is a new microphone. Again, I no longer have that board that really didn't do anything. Website promised it would. It really didn't do anything. It was supposed to have pre-recorded sounds, but turns out I don't need those. But Jimmy, if you're listening, how do you read me? How do I sound? Can you hear me okay? Okay, I'm glad you can hear me okay, Jimmy. The only thing is now that I don't have the that board. I can't stream via Bluetooth the Schwab Live, but I can just pull it up here. So what I'll do, so watch, I'll mute my mic and turn that on.
Government and bondholders there. It's the end of an era of decades of operations for Spirit Airlines.
That's how that'll work. Oh, look at this news. Spirit Airlines ceases operations. That's interesting. That's too bad for them, huh? Hey, Andrew. Yeah, Andrew Reed. Thank you. I appreciate it. I think this is a better mic too. So this mic is a condenser mic. I don't, hold on a second. Okay, got a work call coming in, guys. Work call coming in. I'll be back as soon as I can.
Oh, I love Spirit Airlines. I told you it comes to the Marine Air Terminal, and it's been around since the early 90s. For some people, it's as long as they've been alive. Do you know what I mean? It's a way to save a lot of the college kids. My son's friends going to Memorial Day weekend. I mean, these are fun things, but there are people who had real tickets. Okay. Thank you, Diane. Stocks are rocking. Oh, yeah. I saw the Spirit Airlines fallout in real time on the weekend. I was in Michigan, and folks with Grand Rapids, Detroit, Chicago, trying to figure out to get other flights, where to return the cars. It took them a whole day where they should have been enjoying kids and their graduations, and instead they were, 6 to 10 hours on the phones and spending more money. It was definitely a tough change for folks. Here are the numbers. We saw records for the S&P and NASDAQ on Friday at 5 weeks in a row of gains, but you're only 7 points down on the S&P, okay? Don't cry in your soup. The NASDAQ 100 up 0.1%. The Dow was down 178 points. The Dow finished lower on Friday. The small caps down 0.2%. This is gold is down $73. Oil's up about $1 here, close to 103. The 10-year bond yield at 4.41. So that has been creeping higher over the last few days. Powell's staying on. Warsh is coming in. A lot to discuss. More names in the news as well. We bring in George Sillis joining me here, taking a look at SanDisk, and you have a price target hike to talk about. Good morning, George.
Morning, Nicole. Yeah, looking at SanDisk, if you look at the earnings last week, sales were up 252%, and they increased their guidance for the full year. And so a lot of the analysts are still bullish. Prices have been very high, demand has been very high, and of course, supply for memory has been shallow. So these are companies, SanDisk, Western Digital, have done extremely well. Some of the analysts are still quite bullish. If you look at Bernstein, they actually increased their price target on SanDisk to $1,700 from $1,250, maintain an outperform rating, and that was based on the earnings that again grew 252% year over year. Estimates actually by the company were raised, and guidance was also increased as well for the full fiscal year. So the demand for memory is still strong. AI build out is still there in the memory as well as the storage space. And SanDisk has done phenomenally well, up over 3,000% since it was spun off from Western Digital last year. So it's been a great investment for those who have been in it. And some of the analysts are still quite bullish, like Bernstein.
Yeah, I see consumer discretionary is higher today. I just was looking to try and get a sense of where, we might see some weakness, materials, consumer staples, utilities. We talked a lot, and I want to get to some of the other names. You mentioned AMD, but I was looking at GameStop down 5%, eBay up nearly 5% on that deal talk. Let's talk about AMD, a downgrade there.
Yeah, so this one will be interesting because we know AMD has been a phenomenal mover in the past month. I think it's up over 70 or so percent, and they do have earnings coming out on Wednesday. So going into the report, HSBC actually downgraded the stock in terms of their rating to a hold from buy, but they did increase their price target fractionally to 340 from 335. They actually see the estimates for Q1 essentially to be reported on Wednesday as constrained or limited, not because of server demand, but essentially they're looking at the foundry aspects of AMD's business, which may be constrained due to manufacturing constraints that they have from their suppliers. Intel increased their guidance, but they also have more control of their own manufacturing. So that's why that stock maybe has still ticked to the upside since the earnings report not too long ago. But AMD, again, interesting in the case that it's already up significantly and they may be facing some supply issues, not necessarily demand issues associated with their CPUs, GPUs, as well as their server technologies.
All right, and last but not least, you had Greg Abel this weekend with the Berkshire meeting. A lot going on when it comes to the earnings. You just heard our guest George C. likes the company as well. Some of your thoughts.
Well, a lot of folks have been waiting on some aspects of what's going on with Berkshire because of the transition with Greg Abel. But they did report in their annual meeting that they had an 18% increase in operating earnings, about 11.3 billion. One of the things they pointed out was the share buybacks were quite modest, around 235 million dollars worth of shares. Some analysts and maybe some major shareholders were looking at perhaps 2 to 3 billion as more in line with what the company should do. But nonetheless, the railroad division of Berkshire, as well as insurance, did demonstrate some significant gains. Those are two areas of the industry space that have been very fruitful over the past year or two. But the other thing is, if you look at the cash reserves for the business, it's actually increased almost 400 billion to 397 billion from 373 billion last year, because there's conservative aspects of the business waiting for better opportunities, with the shares actually down about 12% over the last 52 weeks.
Yeah, and you were talking a lot about those tech names. I saw Micron is at a 52-week high today as well. I thought I'd throw that in there. And you mentioned earnings, and I know Coinbase is going to be reporting earnings this week, and Coinbase is having a good day. In fact, it's one of the leaders on the S&P 500. It's up 5.25%, well off the highs though, nowhere near a 52-week high. Okay, George Sill, it's great to see you on this Monday. Thank you so much. Coming up, folks, we're going to take a look at the AI trade. What's working? What's not working when it comes to AI? How's your portfolio? All right, let's have a discussion. Opening bell. We'll be right back.
While others recap the news, I help you read between the lines, from what's moving markets to what's next, with sharp takes and market know-how. Follow me on all social media platforms at Diane King Hall, and connect with me on LinkedIn for more. with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
Welcome back to Opening Bell. Let's check out where we're doing. Okay, the Dow's down 231, the S&P's down 10 at 72.19. Not too far off from records, okay? Connor Brown, CEO, Portfolio Manager, Citi Different Investment. Connor, good to see you. How do you feel about the markets? I mean, I know we have 5 weeks in a row of gains. We had 5 weeks in a row of selling, and I actually know people, when we were in that correction territory, sold. They said, I can't take another week of selling. Now what? Now we've had even Steven, 5 down, 5 up. Now what?
Yeah, I think the disconnect is really the story. So we've got high oil prices, continuing inflation in the U.S., inflationary pressures making it hard to cut interest rates. And last month, the University of Michigan Consumer Sentiment Index printed under 50, which is an all-time low in 70 plus years worth of data. And in the meanwhile, at the end of last week, indices are hitting all-time highs. So that disconnect between what's happening in the consumer, which traditionally has been such a driver of the markets in the U.S., and where the markets are today is really where we're focusing. I think the Mag 7 and maybe soon to be the Mag 10 with SpaceX, Anthropic, and OpenAI looking to go public this year have been growing incredibly fast. We had a really strong earnings season amongst Mag 7 names. So for investors, we think it's important to keep exposure. And you can get exposure to the Mag 7 through low-cost index funds. They're such a big piece of the S&P or the equity today. And then we think it's important to find some exposure to active in areas that don't get represented in those indices like international or small cap.
Yeah, let's get into that a little bit, because you have 6 of the 7 names that reported. Only NVIDIA is left on the 20th of May. What name stood out to you? Let's talk about 1 or 2 names that, when we talk about AI, they're doing things right, or what stands out to you and why? Because we did have now, as you mentioned, all the earnings are in for 6 of the 7 names.
Yeah, I think, I'll focus on Google for a moment. We own Google in some portfolios here at Citi Different. I did our work at my old shop on Google ahead of its IPO. I remember saying in the news that I thought it would be bigger than Yahoo one day, which was just crazy at the time, pre-IPO. And they were in the crosshairs. It seemed as though search was the first thing that might go away in an AI-led world as search volume shifted to OpenAI or to Anthropic. And in fact, revenue growth is accelerating. We're seeing faster growth in their traditional businesses, plus the driver of everything that they're doing in terms of cloud and AI there. I think it's a great example of a large company having the cash flow to invest in these leading AI models and putting all of that work back into their traditional businesses and seeing better growth there than they've seen in a really long time. So I think it's really hard to bet against any of these hyperscalers in this environment today.
Yeah, I mean, look, hit 52-week highs on Friday, 1 year up 137%. I mean, that's no joke for a gain, right? I did read this morning, is Google more of a venture capitalist than anything other than, you know what I mean? Because they have so much invested in Anthropic, so much invested in SpaceX, but you really are noting the cash flow, the revenue growth, the cloud and AI. Is this still an AI big company leader before we get to the next name?
Yeah, we think so. We've seen, we're at this stage right now in terms of AI development where none of the leading AI labs have been able able to create real separation on their frontier models. So earlier this year, we had a new Google model released that topped all of the benchmarks. It was really exciting. Google was back. Since then, we've had both Anthropic and OpenAI release models that look like they're the top of the benchmark. We think Google's coming with another drop that will put them right there. And the big story that we've seen in the last couple of months since this agentic revolution is that the demand for compute is so great that there isn't just or hasn't just been one winner so far. We think that whether it's in terms of the models or even in terms of the hardware, nobody can get enough chips. So Google's benefited in terms of their tensor processing units to power AI. We're seeing the follow through into Intel and to AMD as we move to inference from model training. So I think the story in the last couple of months in the AI world is just incredible demand. That's very hard for even the whole group of leading companies to serve.
Yeah, I mean, I wanted to try and get through some of the other Mag 7 names, but I don't want to leave out Mercado Libre because that's one that you really like to follow. I want to hear more about that.
Yeah, Mercado Libre will report earnings on Thursday. Vin Walden and the team here at City Different that supports our global equity strategies have liked Mercado Libre. We've owned it since 2022. We took the opportunity to trim some last year at higher prices. The stock has come lower again. And in fact, the stock's trading at about the same level that it was trading 5 years ago. So they're not a direct AI model, leading lab, but they're one of these businesses, you could put Apple in this camp, that haven't had to invest in AI as much, but benefit a ton. So in the 5 years in that the stock is about flat, in fact, revenues have grown about 3 times, 300%. Payment volumes there are up 300%. They've got a growing advertising business that's dominant in their marketplace. Operating profits are up 6 times. So the business has grown tremendously. And we think there's a lot more opportunity for growth. In Latin America, e-commerce is just 14% penetrated versus about double that in both the US and China. So really big opportunity for continued growth at Mercado Libre. And they're going to benefit from AI tools in their operations, much as we've seen across the legacy businesses at the US hyperscalers.
Connor, we're out of time, but I think what I'm missing in this interview is how much do you love AI? Are we on the precipice of something incredible? Is the AI revolution taking off or is it done? I mean, I need to pull it out of you in 10 seconds. Give me something I can sink my teeth in for this week.
If you haven't, any listener, if you haven't, especially RAs, if you haven't downloaded Cowork or OpenAI's Codex and started using the agentic tools, you've got to do it. It's transformational in my use and my company's use in AI. And we're seeing that everywhere. New Mexico uses a little bit over 2 gigawatts of power. OpenAI predicts they're going to need 30 by 2030. Just think about that growth. It's incredible.
All right, Connor Brown, thank you, City Different Investments. Really appreciate it. Thank you. Coming up, we'll take a look at the key levels on charts to watch. Kevin Green is standing by. Opening bell, we'll be right back.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Okay, welcome back. This is Opening Bell. We are live on the floor of the New York Stock Exchange. We just had the opening bells on Wall Street. Some down arrows for stocks across the board, though the S&P is down about 4 points. Kevin Green is with me, and he's watching each exact level after the records that we saw on Friday. And 5 weeks of gains. Woo! I mean, folks love that for their 401k and IRAs. Kevin Green, good to see you.
Good morning, Nicole. Yeah, we're seeing about let's say 38% of the stocks in the S&P 500 in the green so far here today, but it's really concentrated in consumer discretionary, being led by Amazon as well as the information technology sector, which are two heavyweights that obviously can hold this market up. Now, if you're looking at the level 7210 to the downside is your first area of support. We pretty much came down and touched that. That's the first candle that we have seen. A little bit of a hammer candle after that opening rotation, if you will, and we are now trying to once again try to reclaim some of these levels to the upside. 7270 is going to be the area of resistance that I'm focusing on. That's where we're seeing the majority of the call flow, especially if you're looking at gamma exposure. And if we have any type of breakdown below 7210, we're looking at around 7130, so close to about a 90-point drop from these current levels here. We are seeing kind of implied volatility skewing more towards the hedging positioning, obviously the geopolitical risk. But if you look at these semiconductors, we just have to call it out. SanDisk, Micron, Western Digital, they're all just screaming to the upside right now. Micron's up about 8%, Western Digital up about 4%. That's really still showing that we have risk on sentiment in the market, and you still have volatility sitting at around 17.5. So implying just a little bit over a 1% move to the upside or downside here. So geopolitical risk, yes, putting a little pressure on some sectors of the market in some pockets, but not fully breaking down this market yet.
Yeah, it's really interesting. I mean, you have a lot of names in tech that are really holding up very nicely. I mean, Micron's up 7.5%, Oracle's up 5%, SanDisk. I know you mentioned some of these, Coinbase ahead of the earnings, so there are definitely some bright spots. I feel like we're in this sort of wait and see mode. I mean, we still have the Iran headlines and lots of earnings and economic news. Crude, let's talk about that.
Crude oil is actually very interesting here. The development from a technical standpoint, I mean, a week and a half ago, everybody was really kind of concerned if you were a crude bull that we were seeing the top of this market, but it was able to hold that 50-day moving average as a key area of support. And now we are maybe potentially making the right shoulder on a head and shoulders pattern. Who knows? We'll see how this actually develops. Your first area of support is going to be that 20-day moving average at $96.75. Then you're looking at around $92 as your next area of support here. MACD, for the most part, still in a bullish formation. RSI in a somewhat bullish formation. I think by the end of this week, Nicole, we will have a definite direction when it comes to crude oil, either higher or we start breaking down lower, just depending on the developments that we are seeing in the Strait of Hormuz right now, because there's a lot that's happening here. And obviously the oil market's going to really try to price that in. But we're actually trading almost flat actually right now for crude oil, but it still looks a little bit more bullish. But you can make the case that head and shoulders is developing, and if so, this could be a short position for some traders out there.
All right, well, thank you for all of that, Kevin Green. Good to see you. We'll keep checking back with you. Now it's time for Alex Coffey. Wanted to see what's on your radar at this moment. I'm also seeing, is this today, Anthropic? I was away, nearing a deal with Blackstone, Goldman, and some of the other Wall Street names for a $1.5 billion joint venture. I mean, we know that these names have been very hot when we talk about mergers and AI and all that. What's on your mind?
Yeah, Nicole, I think after last week, with all that was going on from a news headline standpoint, there was maybe a sense that maybe you'll get a little bit of a time to catch your breath over the weekend and into this week. But you could make the case that while there's not quite as much market cap in earnings this week, there's maybe more on the calendar this week than there was last week. You have about 25% of the S&P 500 earnings still set to release this week. And when you look at some of the names from Palantir after the close today to AMD, Lumentum, Arista tomorrow, ARM on Wednesday, IREN and CoreWeave on Thursday, a lot more of the AI infrastructure stocks are actually reporting this week, which is sort of that second layer of the AI trade that is very much in focus right now. That's just earnings. From an eco data standpoint, you have ISM services, which are set to potentially show prices paid accelerating. You have, of course, labor market data from JOLTS to non-farm payrolls. That's going to be market news worthy. And of course, as you and Kevin were just talking about, you still have flare-ups happening in the Middle East as the Iran-Israel-U.S. conflict is anything but resolved.
Yeah, we did have senior officials denying that a U.S. ship was hit by Iranian missiles. That was reported on by Axios posted on X. But as you noted, the Iran headlines are coming in constantly, 24/7. Let's bring in Joe Mazzola, Director of Trading Services, Charles Schwab, to give us some of your thoughts. I know we'll be getting in also our proprietary stacks report soon too. Some of your thoughts on the action.
Yeah, interesting to say the least. I would have thought they'd see a little bit more selling pressure off the Iran news, but as you mentioned, the news flow is coming in quickly, and you're seeing different sides of the story. So I think that's interesting, especially kind of given the spike up and then pullback we saw in crude. It's really a tech story right now, or at least for today. IT is leading the way. It's only one of only a couple sectors that are up on the day. But I think what Alex mentioned is really important. You're starting to see the second derivative trade now that we've gotten through the hyperscalers in terms of earnings this week with Palantir, AMD, of course, CoreWeave, as he had mentioned. I think the other thing to note is just giving a scorecard so far for earnings. You're looking at an earnings growth rate of around 25% year over year. That's double what expectations were coming into the Q1 earnings cycle. So I think it's got to be an AA plus. What's interesting though, and I think that this will be the case going forward. It's been the case so far, and I wouldn't expect this to change. But not just that number, right? It's really the guidance. It's really the ability to convert AI into revenue producing, whether they're platforms or products, into something that they can show that the CapEx spending is proving fruitful. And companies that have been able to show that have been rewarded. You saw that with Google. You saw that to a certain extent with Amazon. Companies that aren't able to really kind of spell out the monetization of that AI, I got hit a little bit. That was Meta. That was the case with Meta. So, for some of the companies this week, AMD just got a downgrade this morning. And you might expect after the huge move the stocks had, you'd see a bigger pullback, but about 3% pullback's not much considering how much the stock has moved and how much the chip sector has moved overall. Remember, Nicole, it was only last Monday we were talking about the 18th day of up moves on the stocks, generating 47% returns in those 18 days. We've had some pullbacks, a little bit of consolidation, but there's plenty on the docket this week to keep investors busy.
Oh, yeah, without a doubt. Joe Mazzola, thank you for that. I mean, we talked a lot about the earnings. We only have a few seconds left in the show. We have a big week for earnings, 129 S&P 500 companies, 27 NASDAQ companies. I stole that from Kevin Hanks. I hope his numbers are right. I'm sure they are. Also, economic data this week, in addition to the jobs that we focused on, we'll also have new home sales, construction spending, factory orders, wholesale inventories. I'm sure Joe Mazzola will be back with more on the stacks report, things like that. Alex Coffey, Joe Mazzola, thank you both for being here on Opening Bell. Keep watching. Join me next. Morning Trade Live. We'll be right back.
She looks like you, Dad.
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about new trading strategies.
And Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Schwab coaching is concepts brought to life in the real world.
Schwab coaching is learning constantly.
It's relatable, it's practical, clear, understandable, and hopefully entertaining.
Take it for what it's worth, but I think it's absolutely world class.
Schwab coaching is actionable, individualized, community, growth, and empowering.
It's really a human touch with your investing.
We have coaches who have been in the industry and around the industry for a long time.
So the nice thing about Schwab coaching is that clients get access to 9 different sets of expertise.
We want to engage with you and chat on the shows we host. We want to engage with you outside of the classes we host.
A consolidation that could add to this trade. So we shall see.
We have different formats because people learn differently at different times.
If somebody's a real bookworm, we've got courses for you to learn from. They can dig in, go at their own pace.
We have webcasts running through YouTube all day, every trading day. We've got this ongoing 24, 25 times a year events that are making their way around the
So you get that opportunity to share experiences and knowledge with other traders.
They're kind of helping each other learn step by step along with the education that we provide them as well.
We're going to be able to help you regardless of where you are on that path of education.
It's really unique, not just that it exists, but that you can tap into 30 some hours worth of it each and every week. How incredible is that? And it's free.
Live insights, actionable data, and market moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
All right, good Monday morning. Welcome to Morning Trade Live. I'm Nicole Petalides, and we're live on the floor of the New York Stock Exchange on the corner of Wall and Broad after records last week. I'm in for my friend Sam Vadas, and we have plenty to hit over the next 1 hour. So here's what's coming up on today's show. We'll take a macro look at the big market themes. Another trading week begins here, right? We've had 5 down and then 5 up. What do you think happens this week? The latest on Iran, the oil headlines, and AI in focus. Is it in a concentration period, a bottleneck, or ready to take off? I don't know. You tell me. The other thing throughout the hour, of course, the trades on eBay, which is jumping after the possibility of a deal with GameStop, Palantir after the bell. We'll have a lot of names to watch here in focus, right? You'll have Palantir, Pinterest, also many names when it comes to earnings. Okay, I want you to take a look at how stocks are faring this morning. I did mention the records that we saw for the S&P and NASDAQ intraday on Friday. In fact, they closed at records on Friday. The bulls love that. But today, somewhat of a mixed picture. The S&P is just fractionally lower. The NASDAQ is up 0.25%. The Dow, now that's down 224 points, down 0.5%. And the Russell gaining slightly up 4 points. We look at the futures products. We see the 10-year bond yield at 443. So that's been creeping up even throughout the day here. I see it on the big board at 443. I see 441 on the board here. Gold at 45.74 a troy ounce, down about $70. And crude oil at 102. You do have London closed, by the way. No footsie or anything like that. It's a holiday in London. Bitcoin, 79,000. By the way, do you know Coinbase is a great performer on the S&P 500 today? It's been one of the leaders. And Coinbase will be reporting this week, too. All right, Kevin Green back with me and wanted to talk about what folks are saying here, some market thoughts as we kick off a new trading week. Kevin.
Well, Nicole, you're working pretty hard today. I'm glad to have you on the show here. What we are seeing is the market's trying to hold up, even though the geopolitical risk seems like it's kind of escalating in the Strait of Hormuz this morning with Operation Freedom, if you will, trying to get some of these merchant ships as well as these tankers through the strait. The U.S. has stated that they actually did get 2 of the U.S. flagged merchant ships through the strait this morning. That has not been satellite confirmed as of yet, but Nicole, that is a very big deal. We only have about 80 to 90 U.S. flagged merchant ships out there operating in the world. The majority of the ships that do come to port here in the United States are from other countries. So that would actually be a very monumental shift. And that's exactly why we are seeing oil, which did move higher early on, kind of pull back here a little bit. We're down about, or actually pretty much flat on the session as of right now. You can make the technical case that maybe a head and shoulders pattern is kind of taking place right now. We'll see. There's a lot that's still happening. There are reports that maybe some other tankers have been hit over the last hour and a half or so, but the market's really trying to still discount the geopolitical risk and really focus on technology. And the technology stocks are moving aggressively higher today. Semiconductor names like Micron, SanDisk moving higher, making new all-time highs. You also have some of the speculative stocks and that have maybe some exposure to artificial intelligence, especially in the power theme, catching a bid today as well. IREN being one of them, Oklo trying to move to the upside here. So the market's trying to find pockets where they can still move prices aggressively higher, especially when you're looking at some of the lower float stocks. And you have a lot of economic data this week as well. So I'm expecting maybe a little bit more volatility than what we saw last week, but so far we're trying to hold up.
That was a good segue into yourself. Thank you for that, because I wanted to ask you about the factory orders that are coming in now, and it looks like a little better than expected.
Yeah, a lot better than expected here. If you're looking at factory orders on a month-over-month basis, now this is going to be the March report, it increased by 1.5% on a month-over-month basis. Street was looking for 0.5%, and we also saw a revision for last month as well. Previously, it was sitting flat for the month. That actually got revised higher at 0.3%. You are seeing factory orders kind of having a little bit more of an uptick. Is that because of maybe optimism when it comes to the global economy? Are we trying to get ahead of maybe some of the pricing pressures when it comes to fuel? That could also be a factor as well. But that actually is holding up, at least for now, and we are actually seeing this manufacturing goods number coming up. It's higher for the out of the last 5 months. So we're actually seeing some traction there in the industrial economy. That also then tracks with the ISM manufacturing data set as well, which we have started to see more of an expansionary number within that report, which for the most part over the last couple of years has been more in a recessionary tone. So maybe some optimism in parts of the U.S. economy that has been overlooked over the last couple of years.
And, you know, since you're talking about economic data, I was looking and sort of reading through, reminding myself of last month's jobs report, 178,000 jobs. What a reversal it was from the decline that we saw in February. You know, and the unemployment rate edged lower to 4.3%. Now we're expecting some jobs added. I heard Kevin say 63,000 jobs. I saw 50 something at one point. The point is, it's not going to be anywhere near the 178,000 jobs, and we'll get other economic prints throughout this week too. Thoughts on any of those?
Yeah, I would agree with you. I mean, the BLS non-farm payrolls number has been very volatile to start the year. Now, that's not really too surprising, Nicole. Usually in January, it's the most volatile that we see throughout the whole year. And then also we see a massive revision generally in July. So we are expecting, I'm looking at 60,000. There's definitely a wide range. I have seen the upper estimate of 90,000 being brought in as well. That's the upper end target for analysts. But I think the big focus for us is going to be the revision for last month's print. We have seen, obviously, revisions to the downside for a relatively long time. So we had a strong print of 178,000. Are we able to maintain that? And are we going to see a shift from the unemployment rate standpoint? 4.3% historically, not too bad. Actually kind of in that sweet spot here. But we are kind of getting more of a normalization when it comes to the unemployment rate because of the immigration policy over the last year and a half or so. And then also the productivity gains that we are getting from artificial intelligence. So we may not see these job reports of 210 or 230,000 jobs like we have seen in the past. It may actually be a lower benchmark of 160,000 that really kind of shows you real strength within the economy. And then the initial claims and continuing claims have not shown a break or fracturing yet. So BLS is actually a little bit more bearish on the labor market when you're looking at the monthly report compared to what we see for the high frequency data.
Yeah, and I know a lot of folks question BLS sometimes because there's so many revisions and all that. I think one thing that really stood out to me last month, the wage story, which was up 3.5% year over year. And in fact, when you look at the annual increase, it was the lowest since May of 2021. So that shows you, and it's not wage inflation or taking off. On the contrary. So I think that's an important point. Also, healthcare, not surprised to see that jobs were added there. You know, nursing does well and things like that. Less so in some of the other areas. When we think about some of the earnings this week, last week we had a lot of those Mag 7 names. You have 6, so far you've had 6 of the 7 Mag 7 names. Maybe a thought on how they performed and maybe a thought on some of the earnings this week.
would say the Mag 7 names were relatively mixed last week. The guidance moving forward for a lot of these companies were higher than the street's expectations, and the CapEx spending is really going to be the key issue and has been the key issue. How much are they raising their CapEx, and then what are they spending that on? And then when are we going to see a rate of return on that investment? So you did see Meta move aggressively to the downside because it was a little bit big as to what their plans were for their CapEx spending guidance. But you have other companies like Google Alphabet that kind of explained exactly what we were going to get or what they were expecting to get, as well as when they expect to get the ROI on those investments. So kind of a tale of two tapes. We're holding up so far. We have NVIDIA. That's going to be the last major one that we're going to be focusing on here. We'll have that in the next couple of weeks. But just given the CapEx guidance that we've seen from these companies that are purchasing NVIDIA products, the market probably is already expecting actually a really good print for both top line, bottom line growth for NVIDIA. Big question mark is going to be the margin story. Are they still able to kind of push those prices a little bit higher to get to their year-end target? That will be the big question mark. AMD, I think, is going to be one of the bigger ones this week if we're just talking about technology. It's not only because of the GPU sales, but also looking at CPUs. If AMD is really kind of known for the CPU market, and we have seen that theme really gaining a lot of traction, which is why companies like a Dell or even an Intel have been performing relatively well. So expect actually a really decent report there. I think Lisa Su is going to have to hit it, though, when it comes to the conference call to not really shake investors. We have seen that some missteps on the conference calls over the last year or so. Hopefully this time around, that's not the case.
Yeah, and I just did a one-week chart, so I really got to see how these stocks moved after the earnings. To your point, we saw some bright spots for Google, Amazon, Apple, Meta, and Microsoft coming down. It's funny that Meta was the one with the CapEx spending. You remember on the first day when the first time when Meta came out with that whopper of the X billion dollars they were going to spend on, on AI, and everybody's jaws hit the floor, and then everybody realized that this was the new normal. That these hyperscalers were getting ready to spend billions. And but again, Meta, a leader in how they will spend. Thank you, Kevin Green. Great to see you. Thank you. Lots to go over this week. Thanks. Okay, we're going to talk about AI, the concentration narrative, as well as the state of this K-shaped economy. The discussion continues. We have Ted Thatcher next. We'll be right back. I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between. Think I'm gonna be sick. We have to buy that now. Schwab.
Invest your way with Schwab.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
All right, folks, we are back here on Morning Trade Live. Norwegian Cruise Line's down after a mixed earnings report this morning, beating the analyst estimates on earnings per share, but missing on the revenue. Most notably, the company also lowered its full-year outlook amid soft demand and what the company termed headwinds related to disruptions in the Middle East. By the way, we saw Norwegian down 8% now. Royal Caribbean and Carnival also started the day lower. So since we're talking about lower, let's get the laggards out here. Okay, here they are. UPS down FedEx also a laggard. CHRW, that's CH Robinson, down 7%. So that is another name that is on the move to the downside. Yeah, FedEx 364 or so was the low today. And here are some of the leaders now on Wall Street. You know, it should be noted FedEx did hit a 52-week high in the past week. Micron, you're seeing a lot of the tech names. Micron's up 8.7%. We talked about SanDisk being a winner earlier with George. That's up almost 7%. Moderna, a winner, up 5%. And also a gainer, Constellation Energy, a leader here. As of course, we have so many names that will be reporting earnings this week. TD Cowen puts Constellation with a 381 target and a buy rating. All right, joining us now to talk about the big picture, AI, and a little bit of everything, Ted Thatcher, President, Bright Lake Wealth Management. I'm so glad you're with us. What's the latest narrative when people are talking about AI? How are they feeling about AI?
You know, Nicole, when we think about the markets, it's like Wall Street has spoken and said you have to own assets or get left behind. And we're seeing that narrative kind of that we saw so much in 2025 come back a little bit. You know, there was so much talk about how the Mag 7 was driving the returns across the market, dragging the market up. We're seeing that with a little bit of a different nuance, a little different flavor now. Really, it's the bottleneck, if you will, of AI. And so we're seeing, of course, that come on the memory side. We're seeing the data center build outs and that $800 billion of CapEx flowing into the hands, and we're seeing the market drag up because of it.
Yeah, we went from the $600 billion to the $800 billion on these hyperscales and the sailors and the spending. It was a mixed bag as far as the Mag 6 up to this point. We'll wait for NVIDIA on the 20th. I was saying how Amazon, Apple, and Google had some up arrows. Meta and Microsoft came under a bit of pressure. When you talk about, you know, is it the Mag 7, should they stay invested in this group? Because even though they might be a lot of spending that's going on, are you out if you're not in them?
You know, absolutely not. You know, I don't think you have to own every single one. I do think that you want to be a part of the Mag 7. Obviously, it's been a huge driver of gains, but we do want to be thoughtful about it. You know, what's driving right now the highs that we are seeing with, you know, Amazon and Google leading the pack there is margin expansion. We're seeing gross margin expand significantly on the cloud business, and we're seeing ultimately actually net margin expand. And I think that that's what the street's liking right now, and so that's where we have, you know, positioned ourselves and our investors.
So I saw you have some opportunities when you say, I mean, you have some of the Mag 7 names, but then you also have a name like Oracle, right? Yeah. Where do you see the big tech buying opportunities?
You know, Oracle's a really interesting one, Nicole, because I think that, you know, the street's almost forgotten that it's one of the 4 hyperscalers. You know, it's the 4th of 4, and, you know, of course, it hit its highs last fall and had a huge drop, losing 48% of its value. But it's almost like we have forgotten that they have this cloud compute for sale. You know, I mean, we saw so many CEOs, Micron, Andy Jassy mentioned, if they had more to sell, they could sell it, and that applies to Oracle as well. Also, just from a valuation standpoint, I think there might be an opportunity there. And if I could add a technical one, you know, I'll quote Charlie Munger here. He always said, if you just bought amazing companies on the 200-week moving average, you would outperform the S&P 500. The problem is most people don't have that kind of discipline. And Oracle, when it was at about 140 a share, hit that technical marker. Yeah. Obviously, it's come up a bit from there, but I think it may present an opportunity.
Yeah, and I think about it here at 179. I mean, let's just look at the big picture and what maybe some of the recent calls are too. How, you know, what we're seeing here for Oracle. For 1 year, it's up 23%. So it is on a bit of an upswing. The high was 345. The low was 134 most recently. So you think it's on this upswing. Let's talk also about the K-shaped economy or recovery. I mean, you know, sometimes we hear even from the airlines, they say they have much more demand for premium seats than they do for main cabin. You know, what's going on there?
So I think a lot of the discussion around the K-shaped economy has been really almost focused on income, and it's now shifted to assets. You know, I feel like when we ask the question, hey, how's the economy doing? We have to make this distinction. Are we talking about the financial economy here on Wall Street, or are we talking about the real economy on Main Street and how consumers are affected? You know, it's really, I think, part and parcel of what we're seeing happen right now with the war in Iran. The markets are totally, you know, divorced from what's going on in Iran. And meanwhile, consumers don't have that luxury. You know, we've seen the price of oil now over $100 a barrel for, 2 months? And that energy increase is ultimately, it's going to have to move its way through the economy, affecting Americans' pocketbooks. We saw the PCE print come out last week at 3.5% year over year.
When we think about the AI concentration narrative, you're still hot on AI, right? I mean, people shouldn't, even though there may be some slow points or, I mean, you still love it, right? Do you love it?
I do. I think that we are really in the early innings here. I saw AMD's CEO come out and say, hey, we're in year 2 of 10 of this AI infrastructure build out. I think it was Morgan Stanley, I'm not certain. They revised all these CapEx expenses, expectations for 2026 to that $800 billion number. And next year, we're looking at $1 trillion. The street is demanding ROI on that spend. And actually, coming out of this earnings season, it seems like we're getting the first glimpse to that revenue increase. And as I've mentioned before, the margin expansion on the gross and net side.
And that brings us to some of the infrastructure. I mean, because you have names like Lumentum, right, as a name in there. Let's check those out. Why? You had Lumentum, you had Coherent for photonics, right?
Absolutely. So, when we think about data center build out, of course we want to think about the big names. NVIDIA comes to mind immediately. But in order to build out these data centers, you actually have to have connectivity. A lot of times when we think about computer connectivity, we think copper, these wires. The problem with copper, though, is it doesn't transmit data fast enough and it gets super hot. And these data centers are massive. Companies like Lumentum and Coherent have gotten multi-billion-dollar deals with NVIDIA. Why? Because they have an unbelievable technology at the photonics layer. Think about it as the plumbing that connects all these chips together in these massive data centers, allows them to transmit, of course, a tremendous amount of data very quickly, and really, very, very importantly, it doesn't get too hot. It stays cool.
Yeah, and look, I mean, we almost crossed $1,000 for Light, L-I-T-E. This stock has been incredible. The stock is up almost 1,500% in 1 year, up 1,464% for Lumentum, and it has gone from $60 to nearly $1,000. The high is $997. So I guess you think we're crossing the thousands soon enough.
Right there.
Easy peasy, right? Ted Thatcher, President, Bright Lake Wealth Management. Thank you so much for being with us. Great to see you, Ted. Thanks. Coming up, we'll get you ready for a closer look at some of the big picture. Our Charles Schwab team is ready and standing by, and we have Morning Trade Live. We'll be right back. The S&P's in the green. We'll be right back.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
How's it going?
First day, so...
Sometimes,
Next. Try it again?
you could have done better.
Please?
Same goes for where you invest. Level up and invest smarter with Schwab.
Whether you're a bull or a bear, you'll want to catch
Order submitted.
market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
The final 90 minutes of the trading day, that's when markets make headlines.
Order canceled.
Decisions. From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
Order submitted.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Welcome back here, Morning Trade Live. We're looking at Airbnb. It's been upgraded to an outperform rating from Perform over at OPCO. $180 price target. The firm believes that product initiatives around hotels, the company's Reserve Now Pay Later
Order filled.
AI search will all generate revenue acceleration not reflected in current estimates. Oppenheimer also sees Airbnb as benefiting from World Cup demand, with rentals tracking higher in host cities. Of course, you know that's going to be hot, right? And there is the Airbnb chart for you, looking pretty good. They're up to 141, so certainly has been a nice chart to look at in the long run. The high was 147. Over 1 year, it's up about 14%. 1 month up 13%. Hey, this is the last 1 month. I told you it was a nice chart. Okay, Morning Trade Live here continues, and we look at the big picture. We welcome in Colin Martin, Head of Fixed Income Research and Strategy at Schwab Center for Financial Research. It's good to see you, Colin. I haven't seen you in a long time. How you doing? Wanted to hear your market thoughts this morning.
Sure, and good to see you as well. It has been a long time. We're seeing yields up a little bit right now, but that's to be expected. If we look at the last 6 to 8 weeks, we've seen some volatility in the Treasury market, but at the end of the day, most yields have been trading in a relatively tight range. If you look at the 10-year, for example, after we saw a pickup following the initial kind of attack start of the conflict in the Middle East, it's held generally be between 4% and 4.5% since then. And we think it'll probably hold in that range. There'll be some ups and downs, but I think when you look at the inflation picture, which is still too high, it's still too sticky and actually moving in the wrong direction now. When you look at fiscal concerns, and when you look at the direction of global bond yields, these are all factors that should probably keep yields in this somewhat elevated range. And if we look at the balance of risks, there's probably a little bit more upside than downside
Stuff
because
filled.
there's just a lot of forces, especially with the conflict ongoing and the move up in oil prices. There could be a little room for long-term Treasury yields to move a little bit higher from here. Not a ton, but there could be some modest upside.
Yeah, we talk about the yield curve and what folks are saying there. When you look out over time, you said, look, we're probably going to remain somewhat elevated here at this time. We have 441 on the 10-year bond yield. Anything else you want to add just on the longer, maybe on the longer end of the curve, or anything else that we should sort of keep note of?
Well, if we're looking at positioning on the curve, so right now what we're telling our clients at Schwab is to favor short and intermediate term maturities. There's less risk in terms of reinvestment risk with short-term maturities.
Hey, everybody. Good morning. Good morning. I just got off that call while I was listening to this meeting. I was also watching my Sentinel Overwatch chart and had a quick short entry on ES. Just got 3 ticks. The reason why I was tight on that is because got some pretty positive momentum, but I'll take 3 ticks anytime I get it. So, hey, happy Monday. Glad everyone's here. It's good to see you. So first, I got to answer a question from Topu Trades, TopU Trades. Is the system built for options trading, futures trading, both? So that depends on you. That depends on what it is you like to trade and how it is you like to trade it. So this system is showing you the gamma exposure. That's what the levels plotted on the chart are. Here, look, we're looking at ES right now. These levels are gamma exposure. And then the heads-up display tells you delta exposure, VEX exposure, Vega exposure, Vanna, and then the various call wall metrics, and then what's happening with the buy pressure triggers, and then just some advice, not trading recommendations, but just advice based on the culmination of what all those say. So someone said I trade both. That's absolutely true. Takoa did. I do trade both. Now, important to note, if you were watching my channel a while ago, I used to post my live trades in, like the title would say, traded ES for $500 or traded SPX credit spreads for $200, whatever. Can't do that as a NinjaTrader vendor. Can't put on their profit things, etc., because it could be misleading trying to say that, oh, if you follow me, you can guaranteed profit, but that's a misleading statement. So I had to take all that off. So I don't post those anymore. So what I mean by this is up to you. So if you know how to trade gamma, then you can do both. So I trade both ES futures, SPX credit spreads. Once in a while, I'll buy a long call or a long put on SPX just because, you know, they're expensive and it's a crapshoot if you're going to make money or not. Not a crapshoot, but it's a lot to lose. But on days like this, especially last week where we looked on the chart and had nothing but positive gamma exposure, I was rolling credit spreads, SPX credit spreads, at or below the put wall. especially if we would come back to a dip, like come back close to the 21 EMA or have a MACD crossover, whatever you like to define as a dip or a dip on the trend line, whatever, trade credit spreads. And if you've got a pretty significant put wall, like this ES put wall here is 71.95.75. So this is the biggest concentration of short gamma exposure for the way I calculate it. There's another big wall here at, I'm going to call it 72.11, okay? Since we've got a big wall there and then the major walls here, credit spread below that, and we're slightly above the OPEX put wall. You could even go down to the OPEX put wall and play a credit spread below that. Not going to get as much, so it's a little bit more risk if you like that. But you can play a credit spread there. Or if you trade futures, not trading advice because I'm not a financial advisor, you can just straight trade up these levels. So I had a chance to peek at that chart earlier, and we hit that buy pressure level, whether it was active or inactive, didn't really matter, and we came down a couple times. I didn't get to watch it full time, so I don't know what was happening. I don't know if we hit the magnet at all, the sell pressure or the Van magnet. Couldn't tell you. But that's how I trade it. Topu Trades. I hope that answers your question. Man, I guess I should have hung in that. But hindsight's 2020. So I'll see if I can show you what I had. Yeah, Sentinel Overwatch. Can you guys see this? I don't know why that's so small. That looks funny, doesn't it? Anyway, so we had this, what's it called? I can't even think. My mouth is kind of dry too. Green candle that breached the line. And so we had OpCon entry, and then we had this, I forget what you call that, shooting star or something, but just barely touched the red. So when this opened lower, I went short, put my stop up here, got out there. We came back up to the other entry line and then rolled down. That's 72.65 and came down to 72.60. So 5 points right there. Another potential opportunity here. As you can see, the way this works is this is like, I don't want to say a hard limit, but hard to go above that. I mean, we eventually will. Price, as we're closer to the end of the hour, price will eventually break above this as more and more positive momentum comes. But you can see here at 10.10 had a great trade. You could set your buy here. We had 1, 2, 3, and each one of them looks like 4 or 5 points. I don't know. But here, this candle here is a good reversal candle to see. Then you trade it up, especially in the first hour. I got this open on CL too. CL actually, crude oil. Crude oil breached the standard model. Whoops. Standard model between the 9:30 and 10 o'clock hour. See how we have a candle close outside the green? So we moved to the next level up, volatility measurements, and now we're kind of hanging out in between the zones. But I guess I didn't save all my charts. See, eventually we're going to pop up above that. This is past 10:30, so I guess I didn't save all my charts over the weekend, so all the other ones I had it open for didn't save. But hey, hopefully that answers your question. You're welcome. If you have more questions, man, let me know. And then Ghost is asking, hey, Jason, can you try to show ES and Q side by side? Yeah, let's try. I don't know how it's going to work. Okay, so let me tell you some news first. Number one, is this not going? Do I got to push play? Okay. Number one, this tool, like 99% ready for sale. In fact, someone already bought it. Yeah, someone already bought it. Here's the deal. Everything's done. All the files are ready. The marketing material's ready. The instruction manual's ready. The document that explains to you what to do when you get the files, how to set everything up, that's all ready. So we ended up, my wife and I, she's helping me with the website because I don't have time to figure out the website as well as all this other stuff. And she's done it before. She's good at it. But we're using WAP.com as the payment processor, I think. Like the actual exchange of funds goes through Stripe, but the processing, I think it's called, goes through WAP.com. And the reason why we're choosing WAP.com is because it's one of the few sites that will allow you to do this on financial related products with trading charts, quote unquote indicators, any type of thing that has to do with a financial product. Not a lot will let you, which is interesting. I was going to use Lemon Squeezy, but they wouldn't let us do it. So we went to WAP.com, and it's an awesome website, but never used it before. So trying to figure out how to get all this stuff loaded in there, what ended up happening was, it's pretty sweet. You got to do it backwards. So we ended up loading the product, meaning this, like the title and all that, and then the marketing material, the pictures, etc. But before we had a chance to put in the files you get, someone already bought it. So we had to take it, hide it, so that we could make sure the files you get automatically sent to you when you click purchase. So what'll happen in the future, once we finalize this today, is if you want it, when you go to my website and decide you want to get it, you'll click a buy now button. That'll take you to WAP.com, legitimate vendor, totally legitimate. It's not black market in any way whatsoever. It's worldwide, lots of actual companies like myself use it, and big companies too. Totally legitimate. When you go through all that and then click purchase, you will automatically get an email with all the files. So you'll get the file that pulls all the data, and then you'll get the NinjaTrader zip file that you'll load into NinjaTrader. And then you'll have to send me your email address, because then I'll have to go in and authorize your NinjaTrader license for it to work on NinjaTrader. Anyway, WAP.com made us put all that stuff together before it allowed us to put those products in there. So that's how someone ended up buying it before we went final. All right, so Ghost, we were going to try to show side by side, right? So just so you know, this works. This tool, here's NQ futures, here's RTY futures. If you like trading RTY, a little bit less risk. Here's S&P 500 index. This is the S&P 500 index if you just want to straight roll some calls and puts or credit spreads on SPX. Here's NDX index. And then the RUT index. So the way this tool is wired right now is you can get ES futures, NQ futures, RTY futures, RUT index, NDX index, and SPS index. All this. And there's a ton of options. You can turn the HUD on and off. You can turn the OPEX walls on and off. There's a whole video about all this. There's a whole bunch of stuff you can do. But all right, so we're going to try to do this side by side. Let me figure out the best way to do that. So if I do this, all right, I don't know how you're going to see it very well. I will duplicate that in a new window. Can you see those levels? Kind of hard to see. The thing with the broadcast is you can just do normal size screen. Doesn't matter how big my screen is. You can only do normal size screen for it. But something to work on. I'll figure it out. That's what it would look like for now. But hey, check. What is this? What do I have here? Oh, I redid the MACD Bollinger, by the way, for NinjaTrader. If you ever follow my channel, I've got, yeah, you can turn off the hub if you want. It's all you got to do is click a button. See where it says TDD HUD on? You just click TDD HUD on again and it'll go off. So I redid the MACD Bollinger. I also redid my operational moving average that aggregates. The way I have this working now, is it aggregates right at market open, so it's significantly more accurate. So you can see all these wicks touching. You could basically, if we're in a uptrend, which I know is hard to define, but you check out the MACD Bollinger. If the MACD is above the Bollinger, it's an uptrend. You can just set your buy order right here on this operational moving average, which is a custom indicator I wrote for NinjaTrader. It's not a traditional EMA, SMA, etc. Just set it right there and roll on up. But something else I'm working on, as well as finalizing this and Sentinel Overwatch to be available for sale, hopefully by the end of the day, is NinjaTrader's native market depth map. So this is their native market depth tool, and I'm not done with this yet. I still have a lot of work to do on it. But if you're familiar with Bookmap, you can see it kind of looks like Bookmap a little bit. I'm going to transform it so it looks like Bookmap even more. I'm not going to change anything on this, because the one limitation I think that's built into NinjaTrader, I don't know if I'm wrong or if I just haven't figured it out yet, is if you make a change to the setting, all this disappears and it starts aggregating again on its own. But this is the market depth where it shows you the best bid and ask. That's the red lines are the bid lines. The green lines are the ask lines. These big ones are the major levels. And I don't know if I'll keep it like that or not. And then if you can see, who was it last week asking me if I use the bubbles? I can't remember who that was. My memory's going. But these are those bubbles we were talking about. You can see there's a lot of buying here, that big green bubble. A lot of buying here too. That's 9:40 a.m. So you see all that buying here. And then let me get a line. All this buying here, and then when price came back to it, came right back up. Same thing, a lot of buying here, some buying here, some buying here. When price got above it, went up. So that's something interesting. Yeah, you want to see the SPY chart? I didn't do anything with the SPY chart yet. Just put it on because I wanted to have it on there. But I did do this same thing, and I'll have this for every stock. Not every, because how many stocks are there? Millions. Yeah, JBL, it was you asking about the bubbles. That's right. How could I forget that? I'm so sorry. I apologize to you. I'll start looking in the camera too instead of down at the chat. But JBL, how could I forget that? I guess because it was a crazy weekend. But I am doing market depth and bubbles for NVIDIA as well. As you can see, there's a lot of bubbles and a lot of market depth. I haven't changed any of the settings here for NVIDIA. These settings are the default for futures, which there's more volume here on each price level for NVIDIA. That's why there's a million bubbles. But I'll end up doing this for a whole bunch of stuff. When I watched it for a few minutes at market open, these levels are very good. But as the day goes on, things go different. So the other thing I'm going to be doing after I get things launched on my website and wap.com and let you know, the other thing I'm going to be doing is, what am I showing right now? I'm out of it. So I'll be doing this exact same thing. So this is back to the ES futures chart. I'll be doing this exact same thing for equities and ETFs, SPY, QQQ, IWM, GLD, USO, NVIDIA, Tesla, blah, 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 blah. Going to do all that. And I'm thinking about writing the code so that you, as the user, can decide what tickers you want to have the data pulled for and then have it plot on the chart. Because maybe you don't like the same things I like. I like NVIDIA, Apple, Amazon, which is up $7 right now. Let's see what else I got on there. Meta's even. I don't know about you guys, but I need some better monitors. I have a extra TV I've got up there, I am not a guru on monitors and TVs, but it's like the resolution set to different. So when I pull up my Thinkorswim chart over there, it's a lot smaller. So anyway, I'll be doing that for stocks. And then I have this other tool that's I'm super excited about to work on, but I'm trying to do everything in order. And it's a desktop version of all this. Desktop meaning you don't need NinjaTrader. You'll need one to start out. You will need one broker. But I'm going to do it for other ones as well, and it's going to be pretty sweet. Anyway, JBL, sorry about that. You were asking about the bubbles. I got so much to work on. My wife and I have limited time together because we got awesome kids. We love our kids so much, and of course, a lot of time with them. Oh, which reminds me, no live stream Thursday. My daughter's graduating from pre-K, so we're going to the graduation and having the family over for burgers, and I cook burgers special. If you guys want the best hamburger you've ever had, get a piece of paper and listen to what I do here for these burgers. So you get, if you are okay eating a little bit of fat, you want to get the hamburger meat, if you can, from Costco, that's no greater than 90-10, right? 90% lean, 10% fat, no greater than, because you got to have some fat in there. So you put that in a bowl and you marinate it in Worcestershire. That's how you pronounce it. If anybody wants to get into an argument about how to pronounce Worcestershire, let's do it. You mix in Worcestershire and salt and pepper. And then once you get that all mixed up and you patty them, what you want to do is, get each one to be between 5 and 6 ounces, or you can do whatever you want. This is what I do. And you want to patty them very thin so that they're pattied thin and wide, because I don't know if shrink's the right word, but they'll get less wide and they'll get a little bit thicker. After you patty them, you got to sprinkle on this Kinder, K-I-N-D, Kinder brand salt and pepper mix, and it's got a little garlic in it. Ooh! Now, here's the secret. I have a Weber grill. It's black and it's got that stuff at the bottom. You put charcoal in it. The best charcoal to use is Jealous Devil charcoal. Hands down the best. It is unbelievable. Burns the hottest of any charcoal I've ever used, and it burns the longest, and it is phenomenal. And start it with an electric starter, no chemicals. So once you load that up and you get that started, it takes a while. You pile that up in the center. You put your grate on, and then you put on a cast iron skillet and just let that thing get hot. It'll get hot, 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 hot. Then once it gets hot, toss in some butter, throw your patty in, 60 seconds on each side, done. You're ready to eat, and it'll be the absolute best burger you've ever had. Okay, back to trading. Leo, I will let you know when it's ready. So Berard, I'm using a Schwab API. I have other APIs I use for other things, but Schwab is a good one. It has the least amount of limitations as some other APIs out there. All right. So I hope this new microphone's working out pretty well. I like it. I tested it. It sounds to me like I sound better on the videos I made and watched myself. But you guys have to let me know. All right. What else is happening? Anybody make some trades today? So now we're above that Vanna magnet. So you can see prices cruising up. I wonder if my internet's slow. Do I got to click the live button? I don't know. All right, guys, I got to take a break for a second. I'll be right back in a few minutes.
Clear analysis and forward-looking market coverage every trading day.
All right, guys, I got to take a break
level
for
for
a second.
this stock. And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
My parents didn't really talk about money at all. In college, everybody around me had money. I didn't want anybody to find out that I wasn't middle class. I was using credit cards to do anything and everything. I ended up with $20,000 of credit card debt. That's when I kind of realized, like, all right, I have a money problem. This is about how my finances got wrecked and how I fixed it. And if I could do that, you can do it too.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
We are back here on Morning Trade Live. We're taking a look at shares here of Palantir. Reports its earnings after the close. Right now it's at 148 or in change. It's up 2.7%. The company is expected to nearly triple its first quarter profit. A moment ago, I talked a little bit with Alex about the $200 price target we saw from Oppenheimer and the growth that some of the analysts are really expecting for this name. The stock for 1 year is up 27%. Want to go inside out here on Palantir. Joining me right now, Chris Wong, Director of Research, Runnymede Capital Management. I'm so glad that you're with us. We're so excited for Palantir. Obviously a huge name. You think about also the government contracts and such. How are you feeling about a name like this?
Yeah, thanks, Nicole. Palantir, they're the darling of the AI sector, but they have seen their stock price peak in November. But the street is looking for a big quarter, expecting over 100% earnings growth and even sales growth of over 75%. So, those are huge numbers, but they have delivered. They've seen sales growth go from only 12% earnings growth in 2023 up to 75% this quarter. And that would be 11 straight quarters of revenue growth acceleration. That is a pretty amazing track record. But I think the risk here is that analysts are forecasting sales deceleration from here. So future guidance is really going to be important, because what is the kind of long-term sales growth for a company this size?
Yeah, and it's interesting because I saw HSBC put a hold in a 151 target, and meantime we had Oppenheimer with a $200 target. So I guess you really are seeing sort of a mix of how some of the analysts are feeling. I did mention that they expected that Oppenheimer expected growth coming, the government revenue to climb, as you mentioned, some of this 60% commercial revenue projected to surge more than 90%, and just really thought that Palantir is really rapidly becoming the footprint, the leading platform for AI application deployment when it comes to the government and the commercial customers. What do you think when you see HSBC at 151 and then you have Oppenheimer at $200?
Yeah, there's definitely a debate with this name. You saw Michael Burry come out saying that Anthropic is eating Palantir's lunch. So there's definitely risk in the story. There are concerns that Anthropic is making inroads against Palantir. And that's been the big worry about the software space in general. So if the terminal value of Palantir is like some of these other names, like a Salesforce or HubSpot, you have this massively elevated valuation for Palantir, over 100 times earnings, PE ratio. So there's a lot of risk in a name if you see earnings and revenue slow from here.
All right. Well, thank you, Chris Wong. Great to see you, Director of Research, Runnymede Capital Management. Okay, let's trade it. How do we feel about that, folks? George Sillis is here, Senior Markets Correspondent, taking a look at an example trade on Palantir, which right now is up about 3%. George, some of your thoughts on how this stock is moving and how you would go ahead with an example trade?
Well, there's some momentum going into the earnings event, and of course, price action today in the software space has been quite accretive, so I think that's a positive catalyst for Palantir. If you look at the market maker move, the expectation is around $12.50, which is a 1 standard deviation move as we move into earnings event. If that occurs, that'll put the stock around 160 to 161, which is correspondingly where the 50-day moving average is above the current price. So that's a possibility. So what I'm going to do is I'm going to structure a long call diagonal spread. And what I'm going to do is I'm going to be selling the 160 call that expires this week. I'm going to use the proceeds from that option to finance the in-the-money purchase of the 150 call that expires in 11 days. In other words, the end of next week. So altogether, again, you're selling the 160 this week and buying the 150 for next week. Call. This would cost you essentially $4 a share or $400 a contract. So in essence, we're essentially capped to 160 if the stock goes up beyond that by Friday. If not, that 160 will roll off worthless, to which point the 150 call option that expires next week has unlimited profit. But your break even on the trade is effectively 154. If it does hit 160 by the end of this week, your return is about $6 on that $4 of risk, and that's the total risk in the trade. And again, the stock has to be at least at 154 or higher by the expiration of next week for this trade to work out. But again, you're risking $4 a share or $400 a contract, but you do have theoretically unlimited profit, assuming the stock stays below 160 by Friday.
All right. Well, thank you for that, George Sillis. Great to see you. A good look there. A nice example trade there on Palantir. Really appreciate it. And so we're expecting earnings today after the bell, as well as Pinterest for today and tomorrow's slew of earnings. We have about 129 S&P 500 companies this week, 27 on the NASDAQ. So a lot of earnings for you. Later this afternoon, I'll be speaking with Joe Mazzola on the Stacks report. I'll be speaking to Stephen Orr on his thoughts on the market at 2 o'clock on the watch list. So please join me then. In the meantime, thanks for being with us here on Schwab Network and Morning Trade Live. I'm Nicole Petalides. The Dow's down 139. The S&P's up 13. The NASDAQ hits a new record high. Glad you're with us. And download our Schwab Network app. It's available in the Apple App Store. Tune in 24/7, schwabnetwork.com. Trading with 360 with Marley Caden is next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Happy Monday. We're 90 minutes into the trading day. Welcome to Trading 360. I'm Marley Caden coming to you live from our Chicago headquarters. Here's what we have coming up for you in today's show. We'll discuss Schwab's April stacks report and look at how investors were feeling after the big rally we saw in April. We'll also take a closer look at what they were buying and selling throughout the month. And today's disruptor is Airbnb after Oppenheimer upgraded shares ahead of earnings later this week. Then in our 360 round, we'll take a closer look at Norwegian Cruise Line as shares are falling in reaction to the company cutting guidance, citing soft demand and rising fuel costs. Let's check in with the markets, though, before we get to these top stories and more today. A bit of a mixed picture, but predominantly green here. The S&P trading up just marginally higher. We're at 72.32. The Nasdaq did touch a new all-time high. We're a tenth higher at 27,746. On the Dow, we are 0.4 lower, 49,302, and the Russell 2000 is trading up 0.25% at 28.20 right now. For the 10-year, we are up 0.9 higher. We're at 442. The dollar is at 98.21. Gold 45.67 a troy ounce. That's down more than 1.5%. Crude oil at $103 a barrel. That's up more than 1.5%, still over that $100 threshold. And Bitcoin topping 80,000, 80,590, up more than 2% this morning. I do want to welcome in Alex Coffey, though, our first guest today, co-host of Next Gen Investing, to talk about one of the biggest headlines I think you could argue this morning. GameStop putting in an unsolicited bid for eBay. I mean, really fascinating, these two companies, particularly because of the size of the acquirer and the acquiree.
Yeah, and more on that in a bit. First off, this kind of broke late Friday, and I remember seeing this and kind of like shrugging and being like, that's interesting, and then kind of going on with what I was doing. But the more you think about it, it really is a unique story. As Marley said, GameStop announced a surprise $56 billion valued takeover bid for eBay late Friday. Now, this offer price is $125 per share, Marley, which is where you get that valuation. And the consideration would be 50% cash, so debt financing, things to raise that, and then 50% equity stakes through GameStop stock, representing a 20% premium to the May 1st close, so Friday's close, and a 46% premium to the pre-stake price in early February, because, as we learned through this, GameStop has slowly been building an economic stake in eBay, and they now have a 5% approximate economic stake in both stock and derivatives in eBay. Debt financing would include cash and liquid investments already on GameStop's balance sheet, third-party acquisition financing, and then they had a highly confident letter from TD Securities for up to $20 billion. So you can start to see where the math is starting to come together on this, but as you mentioned, big discrepancy as eBay is about 4 times bigger by market cap than GameStop is. So a highly leveraged deal if it were to.
Hey, all right. What are they talking about? GameStop. Ooh, let me catch up on the chat. Don't love the action today, JBL says. I don't either. What Palantir doing earnings? Anything specific? Yeah, bounce off VWAP. Yeah. Ghost is saying, I think the point of my ask regarding ESNQ was not asking if we can, but if we can see it on your display. I try to bounce between the two of them. I didn't like the way that looked, having them both up. It was too small. So I try to bounce between the two of them. That's why I'm trying to make this available as soon as possible so that you can get it and have it however you want to have it. But that's a great question. What tweets came out? I had to go fill up my water and call my work colleague on my cell phone. Yeah, NQ is referred to as the Widowmaker a little bit, but believe it or not, if you can tolerate the risk, it's easier to trade than ES, in my opinion. But remember, you got to tolerate the risk, and that's kind of tough to do. Because each tick is, what is it, $12.50? So you got a point that's 50. And so just watch this. I mean, we're at 891, 92. I mean, that's $400 just in the last second. So if you can tolerate that risk, yeah, NQ is much easier to trade, I think. All right. I got an hour before my next meeting starts. I am going to try to get some work in. I'll be monitoring the chat while I can. Should I turn that volume back on?
As being full of cross currents right now. So as we're all aware of that, and I'm saying again today, another record high, what signals are you watching for as we have so much brewing under the surface right now?
Yeah, there is a lot brewing. If I told you that we have a war in Iran and energy prices are at multi-year highs, if I told you that the consumer is weakening and the labor market's weakening, if I told you that consumer sentiment is down, and I told you that
is it yeah, you're right. It's for ES, it's $5 per tick. I'm sorry, for NQ, it's $5 per tick, 20 per point. I was saying ES, wasn't I? Where it's 12.5, then 50. Yeah, that's still a lot. I mean, let's look at this candle here. We got 27,845 all the way up to 27,9. So if you're $20 a point and you're 55, I can't even do that math in my head. 55 points, $20 a point. That's $1,100. No, you're right. JBL, you are right. You corrected me to 100%, and I appreciate you correcting me to 100%. I will. I'm wrong a lot, and I will never, fight you if I'm wrong. I got no problem. Yeah, I mean, this candle right here, I need to figure out a way for you to. This candle right here, this is an $1,100 candle right there. You can't see that, can you?
Right around 2%. We are seeing that uptick in inflation. A lot of that tied to those energy prices that you mentioned, and we're still unsure.
Yeah, you can.
Gosh, dare I use the word transitory here? That is going to be.
I got a couple things I got to do here. Come on, man.
Do you think we're just going to continue to look through all of these?
So is anyone taking any trades today?
For the best, that the optimism of looking through is just going to work out in the end.
No, I think that's what your typical investors are thinking. I think the latter part of what you said, that we're just going to keep going. The market's going to keep growing. We're going to be okay.
Oh, we're headed lower. Let's see what the rut's doing. Not much. ES. Yep. This is the turnaround point.
Because the market has gone up for so far, so fast, for such a long period of time. I mean, if we go back to March 9th of 2009, other than COVID and a few hiccups here and there, the market's gone straight up. And people tend to think that that's normal. It's called normalcy bias. What happened yesterday is going to happen again today. What happened last year and the last 10 years is going to continue happening. And so people think the market going up is just normal.
Oh, check it out.
The market has long periods of time where it will go up. And those
Here's CL, crude oil on Sentinel Overwatch, and had a trade. Had a trade right here. Could have got in. Then ES. Op kind of entry alert here, and then that's 72. Let's call it 72.68 just to be safe. Rolled all the way down to 72.50. Not that that wick means anything, but almost close to it again. So a good 10 points.
So with all of that, all of the
That'll be available soon also.
How are you positioning right now? Are you making big bets? Is this the time to
Oh, wow.
your capital? How are you looking at the market right now?
Well, it depends on what age range you're in and where what phase of life you're in. If you're growing up in this world, meaning heading towards retirement.
I just bought VWAP on that $1,100 candle. Did you really? Man. You bought which? Hey, JBL, which VWAP are you using? And if you want to share, you don't have to, but be specific. I'll try to load it on here.
I think you want to start focusing on income-producing investments, things that you can count on no matter what the market does. Maybe you're looking at consumer staples because those are cyclical. People need to buy toothpaste and toilet paper no matter what the market does. If you want to play it a little more aggressively, again, as I mentioned, maybe you can overweight NASDAQ a little bit, some of the tech industries. What I think you might want to stay away from, though, and I've heard this trade from people I've talked to, and that is, let's get into energy. Well, with energy as high as it is, if the war in Iran gets resolved, energy is going to go through the floor, and you could be buying high and selling low, which of course is the opposite of what you want to do.
Yeah, absolutely. But you mentioned staying away from some of those cyclicals here. So is there also an opportunity from your viewpoint then in healthcare?
Yeah, absolutely. It's non-cyclical. Healthcare is good in the right.
So you hear that music?
For the first time in a while, the Fed's talked about the fact that inflation might have to raise interest rates because inflation is going in the opposite direction. So healthcare is one of those things that can pass on inflation to the consumer. Same thing with consumer staples. They can raise the price of groceries and the price of things that, everyday goods that you're going to buy.
I also manage
in a period of rising inflation, in a period where you want to be a little more stable, if you're closer to retirement,
my wife's YouTube channel. So I have to upload this video real quick. The daily session VWAP to include overnight. Are you just standard VWAP, not order flow VWAP?
Well, I can't, because I'm an RIA, I can't mention specific names. You're aware.
I'm going to be adding VWAP. I really want to. Oh, this is a great cross below. Great cross below the operational moving average. And then can you guys see? I love this MACD Bollinger. And I think I'm going to give this MACD Bollinger for free if you purchase the heads-up display for gamma exposure. I think it's awesome. Can you guys see that okay? When the red dot, so if you have two consecutive colored dots, and then when it closes below the lower white line outside of it, that's ready to rock lower. I love it. Yeah, normal VWAP. I use that. The 20 EMA, 5. 5-day and 20-day SMA is dynamic support and resistance intraday? Is that what you're saying? The 5-day and 20-day? Or am I reading that wrong?
His trades for Spotify, Uber, and JP Morgan Chase. That's all next on Trading 360.
Support and resistance intraday. Is that what you're saying? The 5-day. Okay, sweet. I'll see if I can replicate that. Am I reading that wrong? Oh, you know what we should do? Let's watch this for a second. Here's a cool thing to note. See this red bubble here? It's not a giant red bubble, but take it in context. We're right before 11 a.m. So that's what we call absorption. So there was a lot of selling here, but price came back up. And now we're seeing selling again, and now we're going to break below that. So this is a key level to watch right here. This level, because we had a lot of absorption. So if we break below that, but this is a key level as well. There's a lot of orders sitting right here. So between 72.50 and 72.45, there's quite a few orders. Not between those two levels, I should say. So we had buying here. Can you see that green? A lot of buying here. So we got buyer absorption right now because price is headed lower. A lot of selling. See who wins this battle. There's going to be a fight. Last week of trading days and last month of trading days. Yeah, gotcha. And looks like the sellers are winning so far. But we'll see. This candle's got to close. When you place a buy limit, it will also show as a red bubble, so it could be buyers reloading. Could be. Let's see where we are on exposure. So we're trading above the call wall right now. And now that call wall moved down. Let's look how we're exposed. Oh wow. So this is the last line of call walls there. That call wall moved down. Yeah, there you go. You called it. Headed back up. Well, we got a green candle. I don't want to say headed back up. Lots of buying, 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 buying. I don't know if you're wrong or not. I have to figure it out. But I do know that this is a key level here. Because we had a lot of selling. Had a lot of selling here, but price couldn't come down. This is a battleground. And this is just above the 0 DTE call wall. I will do more research into this. And we'll figure it out. Because I want to know.
What's happening overseas? Now that, we're past the bulk of the big earnings and we still have a lot ahead of us, and they've been good, as I said, we're really focusing on what's happening overseas. So I think there is some caution out there.
All right, so let's talk about your big three today, because pretty much none of them are related to any of the geopolitical concerns that we have right now, which is a nice change for big three. Your first one is Spotify. We got their earnings, saw a pretty decent sell-off after the earnings. Numbers were pretty
okay, here in a second, I'm going to turn my attention to writing the code.
A bit of punishment for Spotify of late, so take us through this one, Scott.
It was punished, and I think that what we have seen since earnings, the markets may be looking at it and saying, maybe it wasn't so bad, because we're seeing a nice consolidation. Seems like a base maybe has been put in. So what I'm looking to do is capitalize on that by just selling a put spread. So not necessarily looking for a massive rally back, but that floor might be put in. So I am selling the next week, May 15th, 420, 410 put spread, looking for a credit of about $3 or so. Now, that's typically less than I would look for on a $10 wide put spread, but 417, which is the area that would be my break even, to me, that's a place where I'd want to buy stock anyway.
All right, so as we look at the technicals here for Spotify, right now we're about 439 for Spotify today. But Rick, what is the technical setup? Because we walked through the pullback we saw after earnings, and now Scott's citing some consolidation.
I had some pretty similar thoughts, to be honest with you. The reason I say that is because 432,
All right, watch this.
line here, marks the high point that we saw before.
Looks like next stop is right here.
Last earnings event that we had back in February here. So when we look here going forward, that's about
72.45. Is that around where that call wall was?
came in. So we've held on to a
72.41 is where the call wall's sitting. The sell pressure is active. The sell pressure line is, so that's where the current Vanda magnet sits. That's the strike price. Because remember, this is all ES adjusted for SPX strikes. Wow, look at that.
We haven't really gone below some key thresholds yet. So far, kind of just seeming to stabilize. So when we do shift over,
Oh, we're at point of control. On the order flow, you use order flow, don't you, Leo?
EMA in dark blue comes in near 450. That's the closest one to our current price activity. But above that, we have our teal monthly EMA coming in at 483 roughly. That lines up pretty closely with our old trend line that we could have drawn here to give us this symmetrical triangle type.
Yeah.
That could be another noteworthy
Look at that.
resistance area to watch out for. RSI was
72.45 is that line. We're at 72.46 in 3 quarters. Nice. About there. Half point away. Will we get to it? Will we get to it?
Finally, our volume profile study shows a very small pocket of activity here near about the 430 level. But up here,
Okay, we did it. There's that 5 points we were looking for. I should have put a trade on. Remember, 41's that call wall. Let's go back and we'll watch that. 41's the call wall.
Right now we are at 438.24, trading down about 0.75% right now on the day for Spotify.
Okay.
Scott here has underperformed the broader market so far this year, but does have an earnings event coming up.
I am paying attention. I am working on those other things I wanted to do. Oh, there we go. We did it. We are rolling down. The magnets just rolled lower.
So I'm looking to take advantage of the expensive premium this week, and I'm going to sell a bullish biased iron condor. So I'm selling the 72.68 put spread, the 79.83 call spread. So $4 wide on both sides. Can collect about $2 for that. Downside break even gets me right at that $70 area at the end of the week this week. On the upside here, there's some room to run. 81 is the break even up there.
All right, so 81 the break even right now at Uber. We are at 74.71. Again, those earnings coming our way on Wednesday. And your last one here, you've got JP Morgan Chase as your last pick. And, oh, sorry, Rick, I didn't even have you do the technicals here on Uber. I'm just jumping on to the next one. So excited about these. Take us through the technical setup, because we do have earnings, and we'll have them, of course, covered on Wednesday when they come out.
It is pretty exciting.
Okay.
But I also had my eye on some
Yes, I'm looking at volume and market profile. Thanks for the day. You're done trading? That's great. Hey, Takoa, thanks for coming by. It's awesome having you. Always good seeing you around. Thanks for the good words. Love it. It probably is news. Is anyone watching news? I'm working on something here, and I'm not watching news.
Low point before a key breakdown, and then repeated high points here. So very close to those two break-evens, kind of lining up with this range that Uber has established recently. In the shorter term,
Oh, the magnet must have rolled lower. We are in it. Yep, magnet rolled lower, and it's active. So that's sell time.
This suggests decreasing volatility. Low volatility often is the precursor to high volatility, which could be, have our earnings event as a catalyst here. So definitely one to watch going forward.
I got to get up and walk around here.
Averages are clustered together and moving sideways, which speaks to weak trend directionality, kind of further bolstering our outlook that we don't have a strong trend direction right at this time. 251-day EMA comes in at about 80.50, our long-term moving average to the upside. They're kind of lining up pretty closely with our area in question. question for the trade as well. RSI, similar picture here, right around that 50 midline, not really making any strong lean one way or the other at this time. Volume profile shows that we have a pretty decent sized node down here between about 72 to 75. Not terribly much activity until we start getting up to 82 to 87. So once again, kind of that same general area, that the high 70s to low 80s is where a lot of technical factors kind of come together and give us more of a compelling opportunity point, I guess you could call it.
Yeah, and the sell side community very bullish on Uber going into earnings. Average price target is about $104, again trading right around $75 right now. Now we can talk about JP Morgan Chase. I got so excited when I saw this as your pick that I totally jumped over Rick there. Ted Thatcher was on Morning Trade Live talking to Cole this morning about how if you had followed just trading around the 200-day moving average, that if you had that discipline, you'd be doing very, very well. And I'm wondering if that's why JP Morgan Chase is in your big three.
100%. You're spot on with that. I mean, that 200-day moving average has been just incredible support. Now, at some point, that's going to break, right? That's not going to hold because there are no indicators out there that ever are 100%, but it has been incredible. So I'm looking at that. I'm going out and giving this a little time. The other ones were pretty short term. I'm going out to July expiration on this one, and I'm looking to buy the 315 335 call spread. That's $20 wide call spread. Pay $6, maybe a little less for that. I'm purposely giving it some time, but yes, Marley, that is really based right off of that 200-day.
All right, and as we
UAE, Iranian drone attack, petroleum on fire, petroleum site on fire. Uh-oh. Uh-oh, SpaghettiOs. That's not good. I am not ignoring you guys. I'm working on code. I probably should cut the live stream for right now so I can do that and not feel like I'm ignoring you.
We also had this gap up between about 298 to 305. From there, you could say, well, we have some higher lows as well. So we have a rather relatively narrow area in which price has been trading. Same deal again. When you have these periods of price being compressed and squeezed into a range, it can result in an energetic breakout when eventually it is breached one way or the other. So some key boundaries to look out for. 305 to the downside is where we had our lows after our gap up. We had an old high here, 312, but really the higher point came in right around 320. 326 as well, a high point after a gap down that was never really quite broken through. We did test it one time shortly after in around late January or early February, but never really a push beyond that level again. So when we do consider some of our moving averages that we follow, I don't have the 200-day SMA. What I have is the 251 exponential moving average. They're different, but they kind of look at a similar long-term time frame here. So you can see that around this area is where we had some consolidation. It wasn't as clean of a supportive area as we were discussing earlier, but you know, there's many different moving averages that traders look at. It can be helpful to look at a variety of different ones to help inform your trading decisions. So now in the shorter term, once again, we are between our 5-day and our 21-day EMAs. Those come in just above 310 and right around 308. So we can see that if we were to breach that 308 level, that would be a break below our shorter term triangle shape as well. So that would be a notable development. RSI, just a hair above the 50 midline here. So very, very faintly bullish here, but trending lower. So not really a strong lean on that one way or the other at this time. Look for RSI to give a confirmatory move, whichever way price does eventually break if we do start to get a directional breakout. So now we have our our volume profile study. 305 to the downside, 313 to the upside gives us our notable range in which we've seen heavy trading activity. We are quite close as well to our point of control coming in at about 308. So this is the heavy trading area that has been carved out here. So that would be a notable supportive area. If we do start to push lower, the area around 300 stands out as another.
Too bad about that Iranian drone attack, huh?
25 is a higher volume area to the upside.
All right, right now for JP Morgan Chase, we've got them at 307.04. They are trading down about 1.5% today. Scott, want to thank you for being with us for Big Three today, bringing those picks to us. Scott Bauer from Prosper Trading Academy, and of course Rick Ducat for always breaking down the technicals for us. Coming up next, we are going to spotlight Schwab's April stacks report. It was a bullish month for the market, but investor sentiment remained cautious for a second straight month. We'll dive into the details next on Trading 360.
Yeah. I'm going to turn the Schwab back on because I'm working on this website, wap.com, to get this up and running.
Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. Before we get to discussing the April stacks report, a bit of breaking news here as we did see the markets really turn in the last 5 minutes or so. We're now down across all four of our major indices on reports from the UAE saying that it intercepted an Iranian missile for the first time since the war in Iran began. The UAE coming out this morning saying it successfully intercepted multiple missiles that they say were fired from Iran. This report would mark the first time that the UAE has activated its missile alert system since the U.S. and Iran began the ceasefire on April 8th. So that is the latest. It's the only update we have coming directly from the UAE government saying it did intercept several Iranian missiles heading to the country. But I do want to move forward with our April stacks report, and of course we'll continue following this and update you as anything comes across the wire. But we did get the April stacks report from Schwab and an update on investor sentiment, and it did have some very interesting notes in there, Joe. We're buying and selling last month, and some diversions as well here between sentiment and performance. So joining us now, Joe Mazzola, the head of trading derivative strategist at Charles Schwab. Joe, great to have you with us. Now, it was a very interesting report as I was reading through it. The second month in a row that we saw some caution from Schwab investors. Yep. While at the same time, the market was making all-time highs. So take us through what you're seeing here in terms of the cooling of this bullish sentiment while we're amid a historic rally.
I think that you hit the nail on the head, Marley. It's a sentiment indicator, right? So it basically shows what clients are doing in their portfolios, kind of relative to the overall market. So as the semiconductors were the big gainers for the month of April. Those were four of the top 5 names that were sold, whether it was Intel, AMD, NVIDIA, Broadcom. Those were 4 of the top 5. And so what we saw was a combination of clients de-risking a little bit. I think that would be the correct word, but I think it was also rotation as well. So it's atypical for us to see 5 of the top 10 net buys represented by diversified ETFs, and that's exactly what we saw. So it wasn't clients leaving the market, it was more of a rotation into kind of more lower beta, maybe less volatile names, and kind of what you saw from the semis. And I think that when we look at the sector rotations, there was really only two sectors that had good net inflows, and that was staples and that was utilities. So both very defensive sectors, showing a bit more of a defensive posturing from clients this past month.
So, Joe, as we're seeing people shift away from these higher beta names and into these broader ETFs, do you view this as being more of a healthy rebalancing here, or is this indicating to you that investors are not trusting the narrow-led tech leadership anymore?
Okay, well, it's possible. It could be a little bit of both. I think, I think there's a third thing to throw into that mix, Marley, and that's, April was a little bit skewed because of, taxes, right? So April 15th, middle of the month, we do tend to see, some money kind of rotate out of the market into tax payments, especially for people that did well in 2025. And, the market was up in 2025 quite a bit, double digits. So I think that was part of it. I think part of it is just what you mentioned, that, when we asked clients kind of how they felt in March heading into April, a couple of things that they had talked about was, some trepidation around the macro policy, what's kind of happening in Iran, how that would factor into the markets, oil prices, et cetera. And I think that's kind of what we saw. We did see clients be a little bit more defensive in their stance. Does that mean that that's going to be the path that they take going forward? One of the things that was interesting when we asked them at the end of April, are they feeling a little bit better about the markets? They said they are. Their focus is a little bit more on inflation than maybe what we've seen in the past, and there were some concerns around that, whether or not we were going to get any rate cuts, and whether or not inflation would kind of stall some of the progress that we've seen, not only just from the markets but from consumers as well. We've seen some of that in some of the recent GDP ratings. Consumers have pulled back a little bit on the spending. We've seen that on the personal spend. But where we've seen the big pickup was investment spending, and that's in the AI spend. So there's a couple different ways to play that, and I think one of the ways that Schwab clients did it is maybe rotating out of the chips into maybe some of the more software-based names. Microsoft was a big net buy. Palantir was a net buy. Tesla was third on the net buy list, but that one's interesting because that tends to be more of a trade, so we see a lot of sideways action from clients in that one. But yeah, I think buying on the dip and some of maybe the software names that sold off on the OpenAI discussion that we had throughout the course of April, that led to some buying opportunities. And I think that there was a rotation out of some of the semis. Now, did they miss all of the upside on the semis? I don't know. We'll see, because you're talking that the SOX itself was up 18 days straight for 47% gains within the month of April. Is it going to continue, or is it going to stall out? I mean, right now, we're continuing to see strength in the semis, but as we know, parabolic moves sometimes can curtail at some point.
And let's talk about that inflation that is cited as the top concern for Schwab investors here. So we know from the Fed we had the highest level of dissent since the early 90s. We were in this higher for longer now becoming the base case here. How much of this DAX decline do you think is a direct reaction to this rates tension, I think is what is referred to in the report? How much of that is a response?
It's kind of hard to quantify that, but I would say from a qualitative standpoint, absolutely. Like I said, there's a mix of a few things going on that are in the back of investors' minds right now, and that is the combination of the geopolitical risk and inflation, and then also, concern about not just rising consumer prices, but services prices are higher. We're seeing a bit of a weakening in the job sector, although the April prints were pretty good. It's definitely leveled off, right? We're not seeing the same type of job growth at all. So I think at some point when you look at this, you have to look at this from the perspective of multiple asset classes, and we do that as well too. So we kind of break it down by the asset classes to kind of see bearishness versus bullishness within that. And we're continuing to kind of see that K-shaped, whether it's the economy, or you can even use that K-shape from the investment sector as well too. People that are in the markets that have had the portfolio appreciation because of the appreciation of the markets and because of the appreciation of hard assets like real estate, they're still feeling primarily bullish. Some of that bullish sentiment has pulled back, like we said. in April. But if we look at this over the course of the last year, that's still the third highest print that we've seen over the course of the last year. It's just a pretty dramatic pullback from what we saw in March. So I think that there's some cross currents in the markets right now and within clients within their own sentiment right now.
Joe, there were a few other things that stuck out to me. One of them was that we only saw net buying in two sectors. We saw them in staples and in utilities, in these defensive safety plays. I was talking to Anthony Soccaro at the top of the show, and he was saying he's really encouraging his clients to look at these non-cyclicals as well, especially with the backdrop that we have right now with the geopolitical tension. Is that what you're seeing? Is that what we're seeing? Investors just suddenly find their faith in these traditional defensive names?
I mean, that'll be interesting to see kind of going forward, because right now the market itself has been able to really just continue to move forward on really strong earnings. And Miley, I don't want to, I'd be remiss if I didn't mention the fact that earnings are up 25% year over year. Now, within those earnings, and the majority of it is being, the heavy lifting is still being done by the mega caps, but the earnings picture looks good. So you can't say that the market as a whole can't sustain this rally just because of that, but it is narrow leadership, and I do think it makes sense when you have narrow leadership like that. It becomes a little bit more susceptible to pullbacks, and when you have that susceptibility to the pullbacks, you want to be a little bit more diversified, because that's where the money's going to potentially flow is into some of those sectors that haven't participated as much. So I do think it makes sense. I was a little bit surprised to see kind of how narrow the net buys were. But as we head into the month of May, I think that'll be really interesting, especially now that we've gotten through a big hurdle like last week with all the mega caps providing earnings, that the market's it's still set up in a good place. I think overall, like I said, the leadership's been narrow, and I think investors are taking note of that and looking for other opportunities. So if there is a pullback, they have some cushion.
There was another trend that really stuck out to me too, Joe. Clients selling their shares, but then buying up the call options. So is this a FOMO insurance? I mean, what is it, a safety play here that, I want to get out, but I want to be in the game in case, the rally continues and there's a sharp reversal. I need to have some kind of protection. Take me through that trend and what you saw there.
It's really interesting. It's not just a Schwab thing. It's something we've seen in the market. There's been a lot of upside call buying, specifically in technology. And I was surprised just to see the level of what we call skew, Marley, which is the difference between what investors are willing to pay for calls and puts that are out of the money. There definitely has been a bias towards the upside, towards calls. And what happens is, even if you see a selling out of the equities, you can still participate in the upside with what potentially could be a fraction of the cost by owning the calls as opposed to owning the stock outright. And that does offer investors, traders, different ways to kind of participate in that, while trying to kind of maybe do some cash optimization strategies as they're reducing some of the risk on their long shares. So they basically still can have the ability to participate if the stock rallies far enough by owning the calls without having to own the shares outright. We did see that. It's a bit of what we call like a stock replacement strategy, and it's something that seems pretty popular right now in the market.
Joe, really appreciate you being with us to take a closer look at the April stocks report. Joe Mazzola, the head of trading derivatives strategist at Charles Schwab. Coming up next, we've got the disruptors. George Tillis will be joining us to take a look at an upgrade on Airbnb ahead of its earnings later this week. He'll break down the call and also have an example trade for us. That's all next on Trading 360.
you have to buy that now?
Invest your way with Schwab.
My parents didn't really talk about money at all. In college, everybody around me had money. I didn't want anybody to find out that I wasn't middle class. I was using credit cards to do anything and everything. I ended up with $20,000 of credit card debt. That's when I kind of realized, like, all right, I have a money problem. This is about how my finances got wrecked and how I fixed it. And if I could do that, you can do it too.
Welcome back to Trading 360. I'm Marley Caden here in our Chicago headquarters. It's time now for Disruptors. George Tillis, our senior markets correspondent, here with today's company. We're taking a closer look at Airbnb after Oppenheimer upgraded shares to an outperform. We've got their earnings coming up on Thursday, George. What's behind the call today from Oppenheimer?
Well, I think if you look at Airbnb in terms of what Oppenheimer says, as well as the EPS numbers they're expected to report, they're actually quite accretive. So, I mean, Airbnb has been growing its bookings in the double digits. That's the guidance they've provided for 2026. Now, Oppenheimer increased their price target to $180, and they moved their rating to an outperform from peer performer, if you will, a market perform. They actually see some enhanced technology and productivity gains for Airbnb, looking at, of course, AI-based search, as well as new test markets that they're deploying their technologies into. The other thing about Airbnb is they've actually deployed some site credits and discounts, so that might be something accretive relative to some of the competitors out there. But at the same time, their sponsored ad listings have been generating some additional sales, and they actually look at potential artificial intelligence as enhancing the ad-based component of their business. So they're looking for margin growth, essentially. That's what Oppenheimer's looking at. They are at around 17. They're trading around 17 times 2027's earnings, so they have the highest on the street right now. But if you look at the EPS numbers that Airbnb is going to be reporting coming up on the 7th of this week, they're expecting 31 cents, which is about 26% higher than last year for the same quarter. But they're only doing that on an increase of around 5.6% sales growth, estimated to be around $2.62 billion for the quarter. So overall, earnings estimates are quite a bit higher than the sales estimates for Airbnb. So I think this is also going alongside with Oppenheimer saying that the EBITDA margins are improving for the business due to enhancements in technology, despite the fact that revenue is now in the mid to high single digits.
Yeah, I mean, and I was just looking at their performance. I mean, analysts generally bullish on this name, but up 12% just the last month, outperforming the market here as they come into this earnings event. So, George, with all of that said, how would you look at structuring an example trade knowing we've got that earnings coming on Thursday?
Yeah, so I think the software element, so, looking at Airbnb as more of a software network company, I think that's been helpful in the last month or so with the stock higher. I do think if you look at the 2-year trading range the stock is in, as well as the market maker move, which is around $9.80, that it may be still stuck in that trading range. So what I'm going to do is I'm going to be selling an iron condor. It's basically a neutral strategy. I'm going to go into the monthly contract that expires next week because this week's expirations have very wide bid-ask spreads. So I'm essentially going to be selling 20 delta calls and puts in terms of the condor that we're structuring here. So I'm going to sell the 150, 160 call spread that's above the current price. And then below the current price, I'm going to be selling the 120, 130 put spread. So altogether, you could sell this for essentially about $1.50 per share, or $150 a contract. So in essence, the whole premise behind the trade is to have the stock stay within the confines of the short strikes. 150, 150 high is essentially your break even on the high side, and then 118.50 on the low side. So essentially, you're gaining $1.50 to potentially lose $3.50. It's 43% return on risk, but essentially, I'm selling outside the market maker move by about 1.5.
All right, and right now we've got Airbnb at 140.35. Those earnings, of course, coming on Thursday. George, really appreciate you taking us through that upgrade from Oppenheimer and also for that example trade. That's George Tillis. I'll talk to you in a little bit, George, on Market on Close. But coming up next, we've got our 360 round. We'll be diving into the earnings from Norwegian Cruise Line, which are lower in reaction after the company cited higher fuel costs as a part of its outlook. Trading 360 will be right back.
sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com
and on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
She looks like you, Dad.
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about new trading strategies.
And Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Hey, Pop.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim's my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Welcome back to Trading 360. I'm Marley Caden. It's time now for our 360 round. For that, let's bring in our panel to discuss earnings from Norwegian Cruise Lines. Shares trading down almost 9% following those earnings. Joining us now, Asia Georgieva, the CEO and founder at Infinity Research, and Terry West, the senior editor in cruises from Travel Weekly. Asia, let's start with you. I'd love to get your takeaways from this report and what went most wrong for Norwegian this time around.
Thank you, Marley, for having me. What we expected actually was a cut in yields and in a more difficult environment because North American passengers are not willing to travel to Europe. Cost of airfare has increased, but I think even more importantly, there's a fear that the Middle East conflict is a little too close for comfort. Norwegian was impacted disproportionately. We had Royal Caribbean report last Thursday and didn't see quite as much of a cut in terms of yields and expectations. But Norwegian entered wave season with a suboptimal book position, let's put it that way. They have had issues with their itinerary planning for a couple of years now. At Infinity, we have viewed 2026 as a transition year to start with. And the war in Iran showed some of those weaknesses and just exacerbated their revenue generation problems. So even though fuel itself contributed to about a 24-cent reduction in DPS estimate, it was really yields that are lower. We track pricing, as I think we've mentioned to you before, on a weekly basis, about 40,000 voyages. And what we saw in mid-March was a significant cut for pricing for European voyages by both Norwegian and Royal Caribbean. The difference between the two is that Royal basically went through like a V-shaped recovery, whereas with Norwegian, it has been just a slow, consistent decline. And only over the last 2 weeks, we saw some stability. I don't think management was willing to bank on that stability quite yet. So there's a lot of room for improvement. And we had been sort of negative on the story, thinking it's a show-me situation. But I think with the stock pretty much at 52-week lows, it merits a closer look at this point.
And Terry, what were your thoughts here? I'd love your key takeaways from the report, but also, Asia just highlighting, we heard from Royal Caribbean. Yes, we knew fuel was going to be an issue, but beyond that, are you seeing industry-wide problems, or is the pullback we're seeing today Norwegian specific?
Yeah, it's kind of a combination. Like Asia said, wave season, which is a really good indicator of the health of the industry and demand. The bookings for the first few months of the year were strong. That's what we were hearing from travel agencies and the cruise lines themselves. Now, obviously, when the war started in March, demand, like she said, for the Mediterranean began to soften. But Royal Caribbean just a few days ago said they've rebounded, and Norwegian Cruise Line is struggling more. They definitely have some systemic challenges and are lagging behind competitors.
And Asia, we have the new CEO who's known for these turnarounds and has outright said to the market, "I'm here to do a turnaround." We've got a highlighted $125 million in cost cuts. Do you think that that is sustainable? And how confident are you in the ability to actually turn Norwegian around?
This is a very good point, and John Chidsey indeed is a turnaround specialist. So the $125 million outlined today was actually a little bit less than what we had estimated. Norwegian has indeed increased its shoreside employee base, basically 20% higher on a per berth basis, if you will, per unit. So you have 20% more people managing one berth. And we were aware of that even before Elliott, which is an activist investor, had stepped in and had put together a pretty detailed analysis. So the $125 million is definitely low-hanging fruit. What was interesting is that didn't seem to really go into the fiscal year outlook. They're saying costs would be flat this year, despite having 3/4 of that benefit, almost $90 million. And another point I would say is that dry docks this year for Norwegian are lower relative to last year. So that's another tailwind. Again, in our view, there's a lot of room for better yields than guidance. And on the cost side, especially, there's a lot of room for improvement. So I think when all is said and done, this year would be a lot better than what the company is guiding to today.
And Terry, based on the numbers that we got, I'd love to get your level of confidence in management's ability to execute this and what specific signs you're looking for to see if the strategy is actually working.
Yeah. I mean, it's hard to say because it really is all new leadership, and we can look at Chidsey's resume and have confidence that he has experience in this, but we'll have to see how he fares at a cruise company. But we're definitely looking for higher occupancy, higher fares, and it's pretty limited to the Norwegian Cruise Line brand. He said that the luxury brands under the NCLH umbrella are doing just fine, and he's happy with them. So we're definitely looking for improvements in occupancy at NCL.
And Asia, we've seen this divergence. You both highlighted it with Royal Caribbean turning around, Norwegian still seemingly lagging. What are the competitors doing better right now?
Some competitors are doing better if they have exposure to the European source market because we're seeing a very strong demand. And as Terry mentioned, we had a great wave season this year. And some of that demand has continued post-wave season, but it's sort of a same continent demand. North Americans are willing to go on cruises that sail, out of North American ports. And Europeans seem to be waking up to the summer season and starting to book cruises. So Carnival, with 3 out of its 8 brands sourcing locally, P&O UK out of the UK, Costa out of Southern Europe, and AIDA out of the German-speaking market, are actually doing quite well. They're pricing on a sequential basis as if there's no war. And one silver lining that we find this year, we have a lot of capacity going into the Caribbean, which is widely known. Something that doesn't get talked about as much is that in Alaska, the cruise industry has quite a bit of capacity, including one disruptor, MSC Cruises, with one ship. So the North American demand kind of shifting to closer to home benefits these 2 destinations where we're seeing the most demand. So it's just a question of managing that well. And, we're hoping that Norwegian will be able to get back their footing. Again, as Terry mentioned, the premium brands are doing well under Jason Montague. We just need to turn around the Norwegian brand. And it's a great brand with great ships.
Yeah. But being a little beaten down this morning, down about 8.25%. Want to thank you both for being with us today. Asia Georgieva from Infinity Research and Terry West from Travel Weekly. Also want to thank all of you for tuning in for Trading 360 today. I'm Marley Caden. You can download the free Schwab Network app in the Apple App Store. You can also tune in 24/7 on schwabnetwork.com. Don't go anywhere. Fast Market with Giant King Hall is coming up next.
Hey everybody, I gotta turn the live stream off for a little bit while I do this other work meeting. And then I'm gonna work on this code for the stocks. My wife's upstairs trying to get everything on the website ready to go, ready to rock and roll. So if I can come back today, I will, but not sure. But anyway, thanks